You're leaving money on the table without even realizing it. While most people are trying to guess where to invest, there is one group that is light years ahead: US politicians. They are pouring millions of dollars into specific stocks, and they are doing it before any news even reaches the media. Why? Because they not only vote on laws and approve projects, but they also know exactly which companies will directly benefit from these decisions. This gives them a unique advantage, as if they were playing a game where only they know the rules before anyone else. And it's not just about increasing the value of the stock. Many of these companies pay regular dividends, a way to generate passive income while your investment grows over the long term. In other words, it's not just about profiting from rising prices, but also receiving a share of the profits from these companies on a regular basis. If you ignore these moves, you could be missing out on valuable opportunities to increase your earnings and build a solid investment portfolio. Worse yet, you could end up buying stocks too late when prices have already risen too much and dividends are less attractive. In this article, you'll find out exactly which stocks are being bought, why this movement is happening now, and how to use this information to invest before the market notices. But be careful, the longer you wait, the greater the risk of missing out on the best opportunity. Do you want to start investing intelligently and safely? Let's go. The billion-dollar bet on the most protected sector of the economy: health. Among all the stocks that members of the US Congress are buying, one stands out in striking fashion: United Health Group. It may not be a name that is talked about a lot on social media, but behind this company is one of the most powerful pillars of the American economy: the health sector. United Health is not just a health insurance company. It is a financial machine with branches in health insurance, clinics, hospital services, and even technology that connects hospitals, doctors, and pharmacies. It is a billion-dollar operation with direct access to the heart of the American health system. Now, imagine this: several politicians with direct access to health committees, behind-the-scenes meetings, and bills that haven't even made the news yet start buying shares of that same company in the same period. This is no coincidence. It is a sign of privileged information, even if it is legally disclosed later out of obligation. This type of movement raises an important alert. Why invest in health now? Because the health sector, unlike others, don't stop. Even in crises, even when there is war or inflation, people still need medicine, surgeries, and treatments. Furthermore, as the American population ages, healthcare costs are only increasing. What does this mean for investors? Continuous and predictable revenue stream. Exactly what big investors and politicians look for when they want to protect and multiply their wealth. And here's the most important detail: if there is new legislation about to be passed that could benefit companies like United Health, politicians already know about it. They're not waiting for CNBC to report the news. They're anticipating it. And by the time that news finally gets out to the public, prices will already be higher, and the best time to enter will have already passed. Meanwhile, ordinary investors are on the sidelines trying to understand what is happening with the economy, while the political elite positions itself calmly, strategically, and advantageously. If you're looking for where the big boys are betting with confidence, pay attention to the health sector, especially when the very people responsible for writing the laws are investing in the game. Also, as the quiet tech company that became a politician's darling. While everyone is talking about Google, Apple, and Tesla, American politicians are putting their chips on a company that almost no one talks about: The Trade Desk. You may not have heard of it, but here's the scoop. This company is at the center of something much bigger than it seems: the future of digital advertising. What Google does for search ads, The Trade Desk does for video ads, streaming ads, apps, and platforms you use every day without even realizing it. But here's what really gets your attention. Why are members of Congress buying shares in this company now? The answer lies in 2 points. First, changes in digital privacy laws. In recent years, Companies like Meta and Google have faced intense criticism over the way they collect and use user data. But the Trade Desk offers technology that allows you to display ads without relying so much on invasive data. This brings it more in line with the new guidelines being discussed. And guess who's writing those rules? The same politicians who are buying those stocks. Second, we're in a huge transition in the entertainment world. More and more, people are ditching cable TV and switching to streaming. And all of these services need to monetize their content with advertising. The Trade Desk provides the technology behind those ads. In other words, is the invisible infrastructure that supports the growth of free and advertising-funded online content. And the most curious thing, this company doesn't appear in the viral videos about current stocks. It's not in the portfolios of beginner investors, but it's being quietly bought behind the scenes by people who know what's coming. The market is changing, the laws are changing, and those in charge of all this have already started to take a stand. The question is, are you going to wait for the price to go up to notice, or are you going to pay attention now? Pay attention to the timely purchases, how Congress bets ahead of big changes. Imagine you have a friend who works at a giant company and always knows before anyone else when they're going to launch a product that's going to be a hit. This friend buys shares in the company before the launch, and when the product is successful, he makes a lot of money. Now, swap that friend for members of the United States Congress. They have direct access to information that most people don't, like what laws will be passed, which industries will receive investment, or which companies will win government contracts. So their stock purchases are almost never random. They know exactly when a major political shift is about to happen and invest in companies that will directly benefit from those changes. It's like they have a treasure map before the hunt begins. This practice creates a huge advantage, because when the news finally becomes headline news, the market has already reacted, and those who waited end up buying the shares at much higher prices. For those who want to invest intelligently, understanding this connection between politics and the market can be the key to getting in early on opportunities that are really worth it. The buy early strategy that can make all the difference in your investments. When it comes to investing, timing is one of the most important factors in maximizing your returns. And that's exactly what members of Congress seem to understand all too well. They use a simple yet powerful strategy: buy shares before the entire market realizes the growth potential of these companies. Why is this possible? Because, as legislators, they have advance access to information that is not yet available to the general public. For example, they know which bills are being discussed, which government contracts are about to be awarded, or which sectors will receive public investment. This information has a direct impact on the value of the shares of companies involved in these sectors. By buying before this news becomes public, they position themselves to take advantage of the appreciation that usually occurs after the official release. This is the essence of the buy early strategy, getting in at the right time to secure a lower price and thus maximize future profits. For the average investor, tracking these movements can be a practical way to benefit from this advanced knowledge, even if indirectly. Of course, this does not eliminate market risks, but it provides a valuable clue as to where the smart money is going. In short, if you want to increase your chances of success, understanding and applying the logic of buying early can be an important differentiator in your journey as an investor. Then, the sectors that are on the radar of politicians: health, technology, artificial intelligence, and defense. Once you understand how members of Congress leverage insider information to buy early stocks, it makes sense to know where they're focusing their investments. As we've seen, companies like United Health Group dominate the healthcare sector, while the Trade Desk is a standout in the world of technology and digital advertising. But these are not the only sectors that politicians are paying attention to. They are also investing heavily in areas that are expected to grow significantly in the coming years, such as artificial intelligence, AI, and defense. Why these sectors? The healthcare sector, as we have explained, is one of the most stable and essential, especially with an aging population and increased demand for medical services. Meanwhile, technology and digital advertising are undergoing a transformation with new privacy rules and a growing market. Thanks to streaming and digital platforms, artificial intelligence, in turn, is seen as the future of innovation in virtually every sector, from healthcare to industry, from communications to security. Public and private investment in this area is growing exponentially, and policymakers know that companies involved in AI can take off. In the area of defense, the American government's spending is gigantic, and new policies and budgets for military modernization mean billion-dollar contracts. For companies in the sector, these sectors reflect precisely the areas where political decisions have the greatest impact and where congressional investors are betting on guaranteed returns. By understanding these focuses, it becomes clearer how following politicians' movements can help anticipate trends and identify the best opportunities to invest. High-value investments, not small bets. Once you know which sectors politicians are investing in, it's important to understand the scale of these investments. Members of Congress aren't making small, one-off purchases. On the contrary, financial reports show that many of them are investing millions of dollars in shares of these strategic companies. These large amounts reinforce the seriousness and confidence they have in these bets. After all, if it were just an unfounded guess, it wouldn't be worth putting so much money at risk. Furthermore, these significant purchases indicate that they believe that the political and economic changes that are coming will really impact these companies, and very positively. For those who want to follow these movements, understanding the volume of these operations is essential. It is not just a technical detail. The higher the amount invested, the greater the signal that that action deserves attention. Thus, it is clear that the politician's game with stocks is not something casual, but rather a calculated strategy made with real money, and which can serve as a reference for attentive investors. Everything is out in the open. The information comes from official public records. A common question when it comes to politicians buying stocks is this legal? Where do they get this information? The answer is important. All purchases made by members of Congress are recorded and publicly disclosed by law. In the United States, there is a rule called the Stock Act, which requires politicians to report their financial transactions within a short period of time. This means that any purchase or sale of shares made by them is recorded in official databases accessible to anyone. This transparency system ensures that there are no hidden deals or secret transactions, at least not officially. Furthermore, this information is checked by regulatory bodies, ensuring the legality of the transactions. So, when we see that a senator or congressman has bought shares in a company that is about to benefit from a new law, we know that this information has been declared and that the market can follow these signals to try to anticipate opportunities. In other words, investing by observing public data is legal, ethical, and can be a powerful tool for those who want to be one step ahead. Even with valuable leads, the risk of investing always exists. So far, we've shown how tracking stock purchases by members of Congress can provide insider information for everyday investors. However, it's important to understand that despite all this apparent advantage, investing in stocks always involves risks, and these risks don't disappear just because a company is bought by influential politicians. The financial market is complex and unpredictable. Sudden economic changes, international crises, fluctuations in consumer or investor confidence, unexpected court decisions, and even internal changes within companies themselves can all negatively affect share prices. For example, A company that seems certain to grow may suffer management problems, delays in product launches, or even scandals that impact its value. Furthermore, public policies can also change. A law that seems certain to benefit a certain sector may be vetoed, changed, or lose strength over time. This can reduce the expected positive impact and, consequently, the value of the shares. Another important point is that purchases made by politicians are not a guarantee of profit. They indicate trust and access to information, but the market is not an exact science. Many variables influence the final result. Therefore, even if you use congressional movements as a signal for possible opportunities, it is essential to continue doing your own research, analyzing company fundamentals, following industry news, and, most importantly, diversifying your investments to minimize risks. In short, using these signals can increase your chances of success, but they should never be the sole basis for your financial decisions. Caution and planning are essential to protecting your money and achieving consistent results in the long term. How to follow Congress's movements to invest better. Now that you understand the impact of stock purchases and sales by members of Congress, it is essential to know exactly how to access and track this information to take advantage of these opportunities. In the United States, there is a law called the Stock Act, which requires all federal politicians to report their financial transactions, including stock purchases and sales, within very short periods of time, usually within 45 days of the transaction. These disclosures are made publicly to ensure transparency and prevent insider trading. This data is available in official records, such as the website of the House of Representatives and the Senate, where anyone can consult the financial reports of members of Congress. There, you can see who bought what, when, and in what quantity. In addition, there are several specialized platforms and websites that compile this information and present it in an organized manner, making analysis easier for ordinary investors. Some of these tools offer filters, graphs, email alerts, or real-time notifications when a politician makes a new transaction. For example, you can set up alerts to receive notifications whenever a member of Congress buys stock in a technology, healthcare, defense, or other company you follow. These tools help you save time by monitoring hundreds of records and highlighting the most relevant transactions, allowing you to react quickly to opportunities. But it's important to remember, this information should be used as part of a larger strategy. Before investing, it's essential to analyze the company's financial health, market conditions, and your own risk profile. Mastering this routine of following Congress's movements can be a great differentiator for investors who seek to anticipate market trends, increasing their chances of success. The importance of acting fast. Why speed can make all the difference. After learning how to track stock purchases and sales made by members of Congress, it is crucial to understand that speed in decision-making can be a decisive factor in the success of the investment. When a politician makes a significant purchase in a company that is about to benefit from a new law or contract, that information can be made public within days or weeks. However, the financial markets tend to react quickly. Once news of a policy change or its expected impact reaches the public and media, stock prices tend to rise, sometimes quickly and sharply. Those who are slow to act may end up buying the stock at a much higher price, reducing potential gains. Therefore, investing based on congressional movements requires agility, constant monitoring, receiving alerts, and being prepared to make quick decisions. But be careful, speed does not mean acting without criteria. It is important to combine this agility with careful analysis to avoid impulsive mistakes. Acting quickly with strategy and information can be the difference between a profitable investment and a lost opportunity. How to turn this information into real results for your investments. After understanding the entire strategy, sectors, risks, and the importance of speed, the question that remains is, how to use all this to really improve your investments. First, it is essential to create a routine for monitoring the movements of members of Congress. Use official tools and websites to monitor purchases and sales in real time. Set up alerts to receive information about companies and sectors that make sense for your profile and goals. Second, combine this information with a thorough analysis of the companies, looking at financial data, historical growth, competitive landscape, and market trends. It's not enough to know which politicians are buying. You need to understand why and in what context. Third, set clear goals for your investments and a plan to deal with risk, including diversification and emotional control strategies. Finally, maintain discipline and patience. Investing well is not a game of luck, but rather a constant construction of knowledge, observation, and intelligent decisions. Monitoring Congress's investments can be a powerful advantage, but the real difference lies in knowing how to use this information strategically, transforming clues into concrete results. As we've seen, the financial moves made by members of the U.S. Congress can offer valuable insights into sectors with strong growth potential, including healthcare, technology, artificial intelligence, and defense. Companies like United Health Group and the Trade Desk stand out, reflecting not just economic interest, but also the possible influence of upcoming policy changes. However, it's important to remember, even with publicly available data and strategies based on political timing, every investment carries risk. Critical thinking, constant monitoring, and a clear understanding of the broader context are essential. So use this information as an educational tool to better understand how capital flows behind the scenes of politics. And always keep in mind, this is not financial advice, just a perspective to help you stay informed. See you in the next video.